Hello, welcome to Mr. Cryptocurrency Worldwide, and today we are going to look on what is cryptocurrency trading. Cryptocurrencies are an emerging market which have become increasingly popular as major cryptocurrencies like Bitcoin and Ethereum have entered the mainstream. The majority of cryptocurrencies, also referred to as simply cryptos, are powered by blockchain technology. They differ from established fiat currencies in that they are decentralized assets currently unregulated or controlled by any country, central bank, or regulatory authorities. While cryptocurrencies are not accepted as legal tender in the vast majority of countries around the world, their potential to change the wider financial landscapes has made them impossible to ignore and has opened up investment and trading opportunities. The blockchain technology that drives the most currencies also has a wider implications for everything from client-server models to food supply chain and enhanced cybersecurity protocols. Trading cryptocurrencies is quite different from more traditional markets like forex and indices because they are relatively new assets. They are not influenced by many of the same forces as many established markets. You may ask yourself, what moves cryptocurrencies market? Because cryptocurrency markets are so new, there are less correlating assets that drives prices changes, and because they have been designed as decentralized assets free from regulatory controls, things like data releases, rate changes and political upheavals do not affect them as much as fiat currencies. Cryptocurrency prices are sensitive to potential moves towards greater regulations as well as a range of factors like disagreements with crypto communities of upgrades. For example, when a cryptocurrency undergoes for hard fork, this can occur when a Bitcoin divides into two different directions. Attacks on cryptocurrency exchanges with exposed security flaws, news stories that rumors for greater central bank controls, or of countries' potential banning cryptos. There are a range of cryptocurrencies on the market, some better known than others, and each with varying degrees of volatility. Some of cryptocurrency markets you can trade at ETX as a spread bet or CFD include Bitcoin, the original crypto and still the market's most valuable coin; Bitcoin Cash, the result of the first hard fork in Bitcoin's origin chain. Bitcoin Cash is a standalone cryptocurrency. Ethereum, a different, perhaps more ambitious project which aims to fundamentally change the way the internet works. Litecoin, designed to support cross-border payment with faster transactions times than competitors. Ripple, created to address issues such as versatility and speed of international payment solutions. What are some of the biggest cryptocurrencies? If you are new to online trading, working out the differences between some of the leading cryptocurrencies and deciding which to trade can be difficult. These are all relatively new assets, so understanding how each crypto fits into the wider market is crucial before you embark on developing your own trading strategy. This is short guide should give you a better understanding of each of the cryptos we are current offering as well as their main strengths and weaknesses. Bitcoin is the original decentralized cryptocurrency or peer-to-peer digital payment system designed to challenge traditional financial models by using blockchain technology for transactions with other currencies, services, or products. Bitcoin was launched in 2009 by Satoshi Nakamoto, an anonymous internet user or group of users who mined the first Bitcoin. The digital currency was created with a finite number of possible Bitcoin that can be mined, and there are a total of 21 million in existence. Coins are mined using the process power of computers or network of computers to solve increasingly difficult algorithms. To set the value of the very first Bitcoin, original Bitcoin enthusiast miners negotiated the prices in USD on the Bitcoin talk forums. At the time of its inceptions, each Bitcoin was worth roughly $0.05. As Bitcoin grew, and angel investors and entrepreneurs like Chris Larsen, Joseph Lubin, and the Winklevoss brothers invested heavily in its success, so its price rose dramatically, and its highest ever recorded price point in December 2017, each Bitcoin was worth just under $20,000. Bitcoin Cash was created in 2017 as a result of hard fork in Bitcoin's blockchain, and the independent digital ledger that is used to record and verify every Bitcoin transaction. When a cryptocurrency fork and its blockchain splits, two new chains of informations are created, resulting into two separate versions of cryptocurrency. This can happen where there is not a majority consensus with the community over the direction of the cryptocurrency. The hard fork which created Bitcoin Cash was a result of concern over the block limit size and processing time of Bitcoin's original design. The new currency promised faster processing time and more flexibility for users. Ethereum is an open source computing system that aims to democratize the way internet is run and the way that global data is stored by using decentralized applications. Ether is the cryptocurrency designed for the operation of Ethereum and used used to pay miners who mine Ether coins, which, like other cryptos, are recorded in decentralized, publicly distributed blockchain. Ether was designed to be much faster than Bitcoin, with its block time around 15 seconds compared to Bitcoin's 10 minutes. Unlike Bitcoin, there is currently no hard capital on the amount of Ethereum coins that can be mined. Ripple was created as a payment solution using blockchain technology to transform how digital transfer systems operate. By removing or minimizing many of the costs of global payment transfers, they're operating in real time rather than with delays and lengthy payment processing times. Ripple aims to facilitate fast, seamless international payments. One of the few cryptocurrencies that has excited more mainstream established financial institutions. The potential of the Ripple for global trades is huge. Major banks and institutions like Santander have partnered with the Ripple network to bring instant international payments to users around the globe, even integrating Apple Pay support. Ripple's attraction to investors is its ability to act as a common currency that can support other transactions. Litecoin is another crypto setup with the aim of simplifying and facilitating cross-border payment at little cost. Litecoin offers faster confirmations and processing time than Bitcoin does, although it has also been designed to be harder to mine at greater quantities. Litecoin is incredibly similar to Bitcoin in the way it's mined, operated, and run, although there is wide consensus that it may be more efficient. Is cryptocurrency trading for me? You may ask yourself. I may ask myself, is cryptocurrency trading for me? Rather than trading on cryptocurrency exchange and having to open a digital wallet, which can be difficult to set up and complicated to manage, to store actual coins. When you trade cryptocurrencies, you'll be speculating on market movement with a spread betting or CFD trading account. This has a number of benefits over direct buying a particular cryptocurrency. You won't need a digital wallet and so won't be exposed to potential network hacks, and because you are speculating on a price movement rather than owning the underlying asset, you can go both long and short on cryptos. Remember, cryptocurrency markets are some of the world's most volatile market, with big price swings every common. When you trade cryptocurrencies at ETX, you can use all of the same smart risk management tools you can use on our more established markets. Cryptocurrency trading could be for you if you have a good understanding of the market and a strong trading strategy that relies on astute evaluation of potential risk. Please consider subscribing to this channel for a next video that will be on how to trade cryptocurrencies.